Hey everyone, in this video we're going to be looking at the exercises here for chapter 1, and I'll be kind of walking you through how the problems are to be solved, but also just giving you an overview of the spreadsheets that we work in, and make sure that you understand how to do your work in those spreadsheets and some tips and tricks along the way, etc. So with that said, let's get started. So one of the most important things here to keep in mind is, and it's noted here at the top of the spreadsheet, but I will say it again, is that you're going to want to enter your first and last name before starting the homework, because that will make some adjustments to the information throughout the file. And if you do it, or you leave it off, it'll erase your answers essentially, and you'll have to redo the homework. So be very careful not to have that be the case. And you can see a score here. I'll kind of return to that as we work through the exercise spreadsheets here. Step 1, I suppose, is make sure that you've got Excel and you're able to open the file. And if you're having any issues with that, please reach out as soon as you can. Let me know, and we can try to kind of come up with a strategy to troubleshoot, fix IT issues, and hopefully get those ironed out as soon as possible. So, okay, so let's get started here. As far as the exercises go, you can see some of them will have drop-down selections, so you can pick the right answer. So here, let's see, a detailed account of a company's performance over time, and you've got a whole selection of options to be able to choose from. And then keep in mind that you can scroll up and down using the sidebar here. And then in this case, when you select the correct answer, and I guess something to mention as well, the majority of the information in these spreadsheets is locked down, so that these are just the spaces for you to do your work in are open for you to do that work. But otherwise, you're not going to mess up the spreadsheet, etc., by clicking on different files and things like that. So, or different cells, I should say, in the spreadsheet. Okay, so as you're going through and picking out answers, you can see the score updating. Some of these basically are just definitions, so I'm not going to go through and answer those all for you. I'll let you guys look through your notes and the book, and etc., to answer the questions there. Do keep in mind, if you ever have any questions about a homework assignment, an exercise, a problem of any type, please reach out, ask me questions. That's what I'm here for. Use me as a resource as much as possible. I try to be very available and responsive, so don't hesitate to reach out. Okay, and then in some of the problems here, we have an identification. There's a kind of a two-step process to it, and you'll notice 2 red X's. So as you select through, and we say, okay, office supplies, it's an asset, and assets, I've done my notes and my reading, and I know that assets appear on the balance sheet, and then you can see both of the red X's disappear. And so really that's kind of your goal, is to get the red X's to be gone, essentially. And you can go through, if you really want to brute force this thing, and select every option until the X goes away, just to kind of cheat the system, I suppose. But if you can't do that on the exams, and so really use this as an exercise of understanding, to build your skills up so that you can excel on the exams, which are the bulk of your grade. And then you're going to want to click through on the tabs here at the bottom to go to the different exercises. And so that is where you're going to see all of the different work that you'll need to do. So keep that in mind. It's not just this first tab that appears. And if you're new to Excel, hopefully this video will help you a little bit just with navigation, etc. This is a unique Excel document in that it's not like it's locked down just for you to put answers into. You will be doing some Excel work in more of a free-form spreadsheet to do homework problems and so on and so forth. I'll make videos on how to kind of work in Excel and work through homework problems and whatnot. So be sure to take a look at those videos as well. Let's take a look at the exercise 3. So here we're just calculating the missing amounts. This is an exercise to help us shore up our understanding of the accounting equation, very important in accounting. And so you can see here we've got $500 in assets, 350 in liabilities. And so kind of a basic algebra problem, if you will, just to get you kind of comfortable with you doing this kind of analysis. And so what we're saying here in terms of getting this equation to balance is that if the assets are 500, then our assets are going to equal our liabilities plus equity. If our liabilities are 350, then we're going to need $150 to balance out the equation. And you can see there in this problem, it's not, a drop down where you're picking from a selection, but rather going through and inputting the correct answer. And then I'll do one more with you. Again, these are pretty basic problems, hopefully that aren't too difficult for you. But if we're looking at the equation here and we know our liabilities and our equity, add these together essentially to get us to 1,000. 250 plus 750 gets us 1,000. So it's kind of clear at that point, what should assets equal? 1,000, just by looking at the overall equation. So I'll let you guys work on the last few of those. Okay, exercise 4. We want to note the effect on the accounting equation for each transaction. So this is a really important skill to develop as you're working through your accounting knowledge. And in this problem, again, we see 2 red X's. So it's a 2-part answer. We have drop downs. And so if we're purchasing equipment on account, then our equipment is going to be going up, and that's an asset. And then very important, the wording, the terminology here on account is reflecting the fact that we have bought this equipment, but we have not yet paid the cash for it. So that will be an increase in a liability to indicate that we have an amount that we owe, and that was incurred in the process of purchasing the equipment. So eventually that liability will need to be paid off with cash, but at this point, what this terminology of on account represents is that we've incurred a liability. We owe money now, but we have the asset at this time. Think of it, if you want to put it in terms of your personal life, taking out a loan to purchase a car, essentially something like that. Maybe if you've ever bought a house, taking out a mortgage to buy a house, you have the house, essentially you have the car, but you maybe have not paid the cash in full for it yet. So that's kind of the notion with that sort of transaction. In problem number 2, we receive $100 for services that are provided. So again, assets will be going up. In this instance, we're talking about cash because it does say we received the $100. And then we're going to be increasing our equity in this problem. And you'll want to look back at your reference materials to note that equity increases with revenues and decreases with expenses. And so in this instance, we are earning revenue. We provided services, so equity is going to be increasing. Issuing checks to shareholders, so that, even when we use the terminology of issuing checks, keep in mind that that is a cash transaction, and it will reduce our cash asset. And then, as I just mentioned, going into your reference materials and seeing, okay, that's a dividend, and that will be a reduction in equity overall as assets leave the business that way. So hopefully that gets you started there. I'll let you guys work through the rest of that problem. And reach out if you have any questions, but hopefully that gets you started well. Okay, let's take a look at problem number 5 here. So in this problem, we're going to be looking at the accounting equation again, with a little more detail behind it, in terms of seeing the different categories, etc. We can see that we have beginning balances. And so on the asset side, we have 300 plus 240 equals 540 total assets. And you can kind of see that down here. And then we've got liabilities of 150. So we owe accounts payable, and AR is accounts receivable. So we performed some sort of services or sold some products, etc., to a customer, and that customer owes us $240 that we will receive in the future. We've purchased something and we owe a vendor an amount for that purchase of $150. That's the payable portion. And then we've got equity of what does that add to? 390. So we've got retained earnings, which is the reflection of revenues and expenses less amounts paid out over time. And we've got $120 of common stock, which is essentially ownership of the business, money that's been put into the business, if you want to think of it as like an investment in by the owners. Okay, so we'll look at a few of the problems here to start with, just to kind of get you guys started, and I'll let you finish the problems out. So on 5-1, we can see our dates here, and we, again, hopefully that makes sense. You can sort of see the equation here, one side of the equation with the assets and the other side with total liabilities plus equity. We have to balance or have equivalent amounts between those. And you can see we start with 540 on both sides of the equation. So on May 1st, we performed $60 of services on account. Again, very important to that terminology on account to differentiate. If we had been paid the money for performing those services, we would be increasing cash. But in this instance, since we're doing these services and earning that revenue and will be paid on account, we're going to want to increase our accounts receivable asset. And so here you can see the asset side of the equation has gone up by the $60. We're out of balance at this point until we finalize the transaction with kind of our dual entry accounting methodology. And so what we want to figure out, where do we record that? Earning money from providing services is essentially the definition of revenue. And so when we input revenue as our increase, you'll see our red check mark go away. So we've answered that problem correctly, and we're on to the second transaction. So in this one, we can see issued checks to shareholders totaling 120. So again, if we're issuing checks, we're going to want to be hitting our cash account. There's not a separate, checks versus cash account. When we issue checks, that is reflected or receive a check payment in a check form. That will be hitting the cash account for that. But we issued the checks out to the shareholders. So this is a reduction, thinking of it as as a dividend, essentially, to reduce. Oh, I put that in the wrong spot. Sorry, let me put this here. We have a specific column for our dividends, and then that's going to be an outflow of cash from the business back to the owners, essentially, taking out some of those earnings that have been retained over the life of the business. Okay, on May 3rd, we performed services for the client, and we received $360. So like I mentioned previously, if we are receiving the cash on the, when the services are provided, we're not using the accounts receivable account, but instead cash. Okay, on May 4th, we paid a supplier $150 on account, paid what was owed. So again, we're going to reduce our cash account. And you can see a little bit of a clue here too. We had $150 we owed. We paid that $150. So in this instance, we're reducing our assets and reducing our liabilities by the same amount. And one important kind of distinction here to get comfortable with in accounting is the idea of, as far as cash outflows go, when is it in an expense, or when are you paying down a liability? And one of the things you can kind of think about in that regard is, are you incurring this expense currently? Is it in this month, or has the expense already been recorded through an accounting transaction and the accounts payable been recorded as kind of a almost a stand-in, if you want to think of it that way, a placeholder, if you will, for the cash outflow that's going to happen in the future. And in this instance, since we have these amounts, it tells us we're paying what we already owed. What we owe is a liability by definition, so we're going to reduce our liabilities by making that payment. On the 5th of May, we paid AT&T $30 for that month's phone service. So like I just mentioned, so this will now kind of, compare to the last transaction. So in this one, we're saying we're paying for services for this month. We have not yet recorded any expenses related to this purchase. And so we're doing that here. Expenses reduce equity. And so we're going to want to put a negative amount in the expense column to reflect the reduction of equity overall. And then we're going to reduce cash for that amount as well. As we said, we paid it. It doesn't make any mention of on account, etc. It's cash payment going out. Okay, then we received $240, so we're going to increase our cash asset. And this is a receipt for work that we did in the prior month. So it's this $240. And again, so we would have already recorded that revenue last month, but instead of recording the cash receipt last month, because we hadn't received it yet, we booked a $240 accounts receivable asset, which reflects the fact that we are going to receive that money in the future. And on the 6th of May in this transaction, we are recording the receipt of that those funds. So we got the cash, we reduced our accounts receivable. So the accounts receivable now just reflects the $60, not the $240 and the $60. And that $60 is the amount that we earned on account from the first. So we're still waiting to receive the cash from the $60, but that's the total as of now. And it's the only amount that will be in AR, unless accounts receivable, unless we have some more transactions here. Okay, on May 7th, we purchased $120 of office equipment on account. So our office equipment account goes up. And again, the terminology of on account reflects that we incurred a liability to purchase that. So we owe this money. We got an asset for that amount, and we're going to have to pay this in cash in the future at some point. Okay, on the 8th, we contributed $600 in exchange for stock. So this will be cash going into the business, and it will be reflected as a common stock transaction. So kind of, if you want to think of it like an investment into the business in a way, for certain ownership of the business. And then finally, we got a bill from our lawyer for $90. And it doesn't say anything about us paying this bill yet. We just received it, but we're assuming this is for work that has been done this month. We owe this money. So we want to make sure that we record our expense, and I should put a negative there because the effect on equity. We want to record that expense in this month, even though we didn't pay the cash for it yet. So we're going to increase our liabilities or our accounts payable to reflect that we will pay this $90 in the future, but we want to make sure that we get that expense in the proper period, which would be this month essentially. Okay, so now we can see we've got all the red X's have disappeared from the right side of our spreadsheet here. So the last step we want to take is just summing up all the transactions that happen in our accounts here. So I'm going to do that off to the side on my spreadsheet, do my math here and see if I get the right answer. So I have 1,200 total. So I'm just adding up all the transactions in that happened in those accounts. And for AR, it's pretty easy, right? We just had the 240, then we received the cash, so that went away, but we still have the 60. So we'll have 60 as a total there. Office equipment, we just had the one transaction, so not a lot of math to do on that. The 150 of AP we started with, we paid that off, but then we incurred 2 additional liabilities during the month. So if we take both of those into account, we get 210. Pretty easy math here. We've got 720 total common stock, no change to retained earnings. No, nothing other than one transaction there. 420, I think, for revenues. And then we've got minus 120 total for expenses. All right, so that kind of gets you all the way through the transactions there. Hopefully that's helpful to kind of go through those in detail. We'll be working on problems like this quite a bit. So yeah, I think getting comfortable with the payables and receivables and some of the timing there, identifying whether something is an expense or a revenue versus receipt or payment of a prior expense or revenue is important. So hopefully that makes sense. And feel free to rewind the video and use this as a reference tool as much as you can. Okay, again, we're on a matching problem here. Not a whole lot I want to do on this one. You can just kind of go through and pick out the correct assumptions or principles, etc. Use your materials and come. These ones are. I don't want you to memorize all of these per se, but get somewhat familiar with the text and just what does this mean, I think is kind of the biggest pull from doing these sorts of problems, just to get a little bit of a better understanding of accounting in general and just what these items are getting to. So this might take a little bit of work here to make sure that you understand, the topics. Like I said, try not to just brute force it and pick every one till the red X goes away. It's not going to help you in the long run. More so using your notes and your text there to get the right answers. So I'll let you guys work through the rest of those yourself, or let you all. So this one, in terms of accounting principles relevant to all the situations. So this asks just a little bit more detail, to apply that knowledge to specific scenarios. So if you have any questions on these, please bring these to class. Again, I will let you all work through these yourselves and use the notes and reference materials to solve the problems. But if any of these don't make sense to you, or you're confused by the answer is what it is, definitely note that, and please bring it to class. I would love to have a conversation on those and explain. And I'm sure if you have a question, there's other people in the class who will have the same question as well. So let's all learn together, basically, right? Okay, now we have a financial statement problem, and we're going to want to go through and complete our financial statements here. So we've got a combination of drop downs. So you can see, 2 red X's, 1 went away there. And we've got a listing of all the ending balances essentially in these accounts. And so when we look and say, okay, service revenue, that's our revenue. We want revenues and expenses on our income statement. And we're just going to go off of our listing. And then when it comes to expenses, we want to go through the list and make sure that we grab all of the expenses out of here. Excuse me. So for example, insurance expense. And I believe on this one, you want to go down the list. I believe, let me confirm this, that if you pick rent expense, you'll get the red X back. Well, and the reason there is, while it's still an expense, this problem is built to pick the first expense on the list. So if you're getting confused about why rent expense is still not getting rid of the red X, there is a order that this needs to go in, and by alphabetical order is the appropriate. And that is generally the correct listing on an income statement is alphabetical order for the expense counts. So I'll let you all work on the rest of those. Then you're just going to want to sum up. I'll provide a little bit of assistance here. We want net income. So you're going to want to summarize your expenses, calculate the total, include that total in the box here, and then take your revenues minus that amount to get your net income. And that should eliminate all of the red X's. And then for our retained earnings statement, we're going to want to go through and have our beginning balance of retained earnings. And what we're doing in this statement is trying to arrive at the ending balance as well. And then we're going to add in our net income and subtract out our dividends. And so I'll let you all will have calculated net income, and you'll just want to bring that down to the statement here. And there's a workflow of financial statements that's important to keep in mind, with the income statement being first. And the reasoning behind that is you calculate net income on the income statement, and then you bring that to the retained earnings statement here. So you can't really do the retained earnings statement until you have net income. Thus, why you start there. And so you're going to want to bring in your total here as a beginning balance, and then I'll let you all pull that in, and it's just a basic beginning plus net income minus dividends equals the calculation. And again, I'll let you all do that calculation. And then you're going to want to go through your balance sheet, and your assets are going to be listed by order of liquidity. So you have a lot of examples of that. I'll let you look to the book or other reference materials to if you're getting stuck there. But the general idea is you want what is the most long-term assets. Things like land are going to be more at the end of the list. It's probably the last one there. Yeah, so land is the last and cash is the first. It's order of liquidity. So how easy is it to convert these assets to cash? Cash being the ultimate, it is liquid. That's what we're talking about. So it always goes first, and then AR is sooner to be converted to cash, so on and so forth. So I'll let you all, basically we're just pulling these off the list, the totals, and summing those up. And then liabilities, kind of similar thing, starting with what's going to be paid sooner typically. So accounts payable is usually the most current, soon to be paid liability. And then something like notes payable, which reflects a long-term debt, maybe it's a 10-year bank loan or whatever, is going to be 10 years versus accounts payable that need to be paid within 30 days or so. So that's the order you want to go in on your balance sheet there. And then again, just pulling totals in off the above. I'll let you all input those. And then when it comes to shareholders' equity, there's two primary components. We've got the common stock, and we've got ending retained earnings, not beginning retained earnings. And this is again the flow of why the retained earnings statement is second, because you'll calculate ending retained earnings and then bring that down, input all your totals, and then the final thing to kind of as a check figure confirm that your accounting and your balance sheet is in balance is to add together your total liabilities and your total shareholders equity and ensure that that agrees to your total assets, which again, remember, that's the accounting equation in essence, and that's what's shown on our balance sheet. So I'll let you all, fill in the details, but hopefully that gets you started and in a good place to work through that problem. This problem is very similar to the problem on number 5. And there's a demo video here you can click. So I will leave this for you all. But if any of these are confusing or you have specific questions, please reach out. Bring them to class too. That's helpful. So I won't spend too much time there. Again, we're back to just kind of the basic, using some simple algebra to figure out how to balance our accounting equation. So if we've got assets at a certain amount, liabilities plus equity should total to be equal. And then our final problem here, we're going to classify some activities that would be on a cash flow statement. Again, that's another financial statement. In this class, we don't really spend time preparing the cash flow statement, but knowing which category the types of transactions would be on, that's something that you should at least have some familiarity with and could be on a quiz or exam, so on and so forth. So there's only 3 of these. I'll let you guys, there's only 3 options too. So again, you could brute force it and just pick everyone till the X goes away, but please spend some time to understand why the X is, or the answer is correct, so you'll get the question right on other areas. And then finally, we've got a similar problem here. So step 1 is going to be determining the correct category. And then so you can see step 2 is identifying whether this is an inflow or outflow. So just getting comfortable with a little bit of accounting terminology and critical, logic in accounting and how to think about these types of transactions. So, and then as you can see, our score is going up as we've gone through. Again, I did kind of an excerpted amount, certain problems, and left certain problems open. But at this point, with everything that I've done, you're up to 30%. So keep working through that, get it up to 100%, and submit as noted on the module within Canvas. And yeah, please bring me any questions, and hopefully this is helpful. I'll see you all in class.